All right, well, let's look forward to the week of October 16th for our weekly economic and market update. But to look forward, we have to look back. And what we found this week is that when the war drums beat, everyone pretty much goes to a flight to safety. And that's really what happened this week. We had the markets fell a bit as the news kind of sank in, especially the last couple of days. Um, we also had the dollar um, went up as a flight to safety. Interest rates fell as people from all over the world move into the U.S. treasuries. And so that was a little bit of relief for them. Um, so let's begin with the markets this week. And these are the weekly data. You can see we were actually up. We had this nice candle here, uh, basically a hammer, which is a good sign where you're for the previous week. We started way up, and then as the week kind of it just kind of sinks in, I think, to people over a period of time, and nothing good comes from war. So, and I have great sympathy for the people both in Israel and Palestine. My belief is that Palestine's brought a lot of this on themselves. If you look back at the history, I watched a number of documentaries this week on the whole conflict and kind of what's happened. And everybody's got a certain bias associated with it. But anyway, it sank in this week, and we can see that we really are trying to get back to this 314 level. Made a little bit of progress made actually a lot of progress at the beginning of the week if you want to kind of look at the days. And then we had kind of a letdown here Thursday and Friday as more information came out about what had happened, and on all of that, it gets people nervous, and fear starts to take hold of the market. So that's the Dow Jones. The SPX kind of experienced the same thing. These are the daily data that you can see. It started up. We're on our way. I thought we were going to fill this gap here, but didn't quite make it. But the chart overall doesn't look too bad. It's obviously in a downturn. We wound up for the week on the SPX still up, but again, that's not what you like to see. Is it closed maybe up in this area, and it struggled all day. Today, Friday the 13th, and thought it might break through a little bit and then pull back as the day went. And there's the candle for today. So that's the S&P 500, the Qs, which is NASDAQ. We had two really down days, but again, for the week, it finished up, just got this long wick here, which is, again, these are inverted hammers that are, not a good thing that you like to see, at least when you're looking at candlesticks. We're still in this kind of banner here, so it could break up, it might break down. The fact that it came from below usually helps to indicate that it would break up, but we'll have to just see over time. And then the IWM, which is the Russell, I drew this week, kind of the box it's been in since last October. So it's been in here for just about a year, and we're at the bottom of the box, which might be a good time to buy calls or invest in the IWM, thinking that if it continues this pattern that we go through. Not a trading call, but just an observation that it's been in this box for quite a while. The 10-year yield did come down for the week, and we're still kind of in this uptrend. Not quite breaking it, but that is what is referenced as bullish engulfing candle. It's engulfed here. So, I think it probably would have, it's hard to say what would have happened. It looked like we were starting on our way down and then kind of made our way back up yesterday on the 10-year yield. And the dollar obviously got stronger because of what's happened, but and these aren't perfect lines. I could probably work on them, but regardless, it's looking like, even if I straighten this out just a little bit here, hitting these candles, then it's still looking like we're into what's called a 1-2-3 pattern, which is now this is the one. We'll see. We'll have this is the challenge to the 2. And then come back down here for the 3 and either break it or potentially, continue up. I mean, it's just an indication that there's a break in the pattern. And, if we start to get below, let's say here, which is kind of my expectation at a 105.55 on the dollar, that we would start to see it continue to weaken over a period of time. And then crude oil, it's been an interesting week for crude. It winds up, up for the week, but we had this uptrend. If we look at the daily, you can see it a little bit better. We had this break of trend again. It may go up a little bit more, or this is the challenge potentially, and then break down below this area. About $80.58 would kind of be my expectation of its next move. This trend line here is now providing resistance for oil, and expectation again is that we'd start our way back down. The VIX really shot up today and then came back down again, rejecting from the 20, and it's done that pretty much over and over again here. Keeps kind of wanting to go up and then not, but there's just the geopolitical situation is some of this. I wouldn't put a lot of confidence in these particular numbers until kind of the smoke clears here. I didn't show it, but commodities were up, especially gold today was up big. It was up over $60 at one point, which is a huge move for gold. And then I think it was somewhere above 55 at the end of the day. The economic calendar, I mean, it got lost in the shuffle, even though there were some things to report on. We've had a lot of speeches, and we got a lot more speeches coming from the FOMC members, and I didn't really hear anything coming out. There's little less hawkish talk, would be my assessment of some of the summaries I've heard. The big thing obviously was Wednesday with PPI, which month over month came in hotter than expected. And then the core PPI came in a little bit hotter than expected. The FOMC minutes were released, and again, there wasn't really any surprises there. And then Thursday we had the core inflation rate, the CPI, month over month in line, year over year in line. So the only thing here, a little hotter on the regular inflation rate, not the core, a 0.1% off year over year, 0.1% off was what the consensus was versus the forecast. So, you know, I there wasn't really anything to react to. I thought it might get a little bit more of a negative reaction there, but most of the tension this week has been paid to everything that's happening in Israel and the Gaza Strip and Lebanon and all the places around there, Syria. Then today, kind of anticlimactic, but the Michigan consumer sentiment came in a lot less than what the expectation was, and certainly less than it's been hanging around this area for a while. Just kind of look at the numbers here. Up above 68 and that type of thing. It's started to make its way back down, and if sentiment starts to go away, then obviously this affects the forecasts associated with what David Hunter has been saying around deflation, but you're going to have to get more of this consumer sentiment to get more negative. And if we're to look to next week, we have Monday, we have the New York Empire State Manufacturing, which has been all over the place. We have huge, bunch of speeches. Things that can move the market here, though, are retail sales, and then on Wednesday we have the mortgage rate will be talked about. I think I mentioned it. We'll just go back for just a second. Wednesday, yeah. So mortgage rates were up this past week. Expectation would be that they might start to come down a little bit next week. We'll have to see how things play out in the Middle East. And got building permits, housing starts, but the economic calendar doesn't carry as much weight when you have geopolitical conflicts going on that could really spiral out of control. Thursday we have initial jobless claims. They came in pretty much in line. I think it was 210 was the consensus. They came in at 209 yesterday. Philly manufacturing index, existing home sales, bunch of speeches, could move the market, but I doubt it. And so that's pretty much what you got to look forward to in the next week. Not a lot. Everything, again, will be around what's happening in the Middle East. And, my final comment is if you look at the expectations in the Fed for November 1st, there's still 89.2% chance, basically, or expectation that the Fed will leave rates where they're at, especially with the conflict going on. I don't think that they're going to be messing around with rates. If we look ahead a little bit, we're still pretty strong. No hike in December, January. All these are subject to change, including cuts if things go south in the Middle East that get worse than what they already are. So that's kind of again, looking ahead, we're starting to look at rate cuts in March, and they get kind of more in May. Here, this is where we stand today, and then in June, still a little leaning towards potentially a rate hike, but you've got talk of rate cuts as expectation, the probabilities in these meetings. So, that's really my final comment. Is just kind of seeing where things go. There's with so much uncertainty around what's going on. We're hearing that Hezbollah is going to join in and fight Israel, and we've got Syria, and we've got Lebanon, and we've got all these different countries that potentially cause problems, and Iran. They're all ones that hate Israel, and they don't want them there. at all. So these will cause the markets to be very volatile and a lot of uncertainty to look forward to, and we'll see how things play out here in the next week, and how much they've changed when we look back next Friday. Anyway, that's what I wanted to cover this week, and remember, there's always a better way.